Hello, and welcome to our next NEP. NEP stands for Nonprofit Auditor Points, and I'm your nonprofit auditor. My name is Irina Ryshkova, and I'm a CPA and auditor that serves nonprofit communities. We have a small CPA firm that provides assurance, audits, and review services. We're located in downtown Oakland, and I created these NEPs to help nonprofit communities, its management and board to better understand some accounting and auditing issues. Hopefully, you as a management and nonprofit leaders will find this information useful. Friendly reminder, it's not authoritative video. I am simply sharing my knowledge and experience with nonprofit communities. Thank you so much, and let's do it. So today I will talk about one of 3 letters that auditor issue to the management and to the organization at the end of the audit. Typically, when we perform audit, we send 3 letters at the end of each audit. Management representation letter, recommendation letter, and letter to communicate to the board at the end of the audit. So the first NEP that I'm going to record, it's management representation letter. What is it? How to read it and understand it, what management need to do about this letter, and why this letter is very important. Okay, let's talk about it. Management representation letter. You can see it on your screen right here. And this letter is from the organization to the auditor. Therefore, typically auditor helps the management to prepare the letter, but the organization logo will be here, and it says management representation letter. All 3 letters that I mentioned before should be dated as a date of the report. So the date of the report, it's the same date when the auditor stopped performing the audit. For example, typical, if we issue the audit for the year ended September 30, 2023, and we worked 3 months on that, then the audit report will be dated December 31st, 3 months after the September, and the date of the management representation letter will be also December 31st. This letter, the purpose of this letter is to communicate some very critical information to the auditor. The purpose of this letter is to provide protection to the auditor and give an assurance to the auditor that board and management provided all the necessary information to the auditor to issue the report. So let's go over some areas where the management gives the auditor assurance that they performed during the audit. So this letter is saying, we as a management provide this representation letter in connection to the audit for the financial statements, and this is the year end that was audit performed. And as a result of that audit, auditors issued the set of financial statements in accordance with GAAP, for example. We typically performing GAAP audits. We do certain representations as a management, provides certain representation during the audit, and these representations are listed here. So for example, if this is the date August 12th, assuming the audit was done on August 12th, same August 12th would be here. And these are representation. As you can see, I'm scrolling, you see the management provides 23 various representations. Let's go over and see what that means. It means that the management, number one, management fulfill all the responsibility that they outlined in engagement letter. And we will talk about engagement letter in some next NEPs. Management is saying that they confirm that audit reports is in accordance with GAAP. Friendly reminder, I know that a lot of nonprofits assume that this is auditor report. Actually, the report is financial statements are nonprofits' financial statements. Auditor only helps them to put them together, prepare them, and issue an opinion. So therefore, management makes representation that these financial statements are in accordance with US GAAP, which is United States General Accepted Accounting Principles. Management also makes responsibility that they are responsible for design, implementation, and maintenance of internal control that are relevant to prepare financial statements. So sometimes we do hear from the nonprofits that we as the auditors need to record year-end adjusted journal entries. We as the auditors cannot be part of the internal control, and we as the auditors could not be included in design of that internal control. But this is management responsibilities outside the auditor to design and implement and maintain the internal control that will help to prepare accurate financial statements. Next representation. Management acknowledge the responsibility for design, implementation, and maintenance of internal control to prevent and detect the fraud. So it's very critical. So it's not just design control, but the specific control that will help to prevent and detect fraud. Very often that control will include some sort of oversight, some reconciliation, and segregation of duties. Those types of controls typically help to prevent and detect the fraud, and there could be others. Management also disclosed any related party transactions and relationship to the auditor, because very often auditors, we can only audit numbers in that we are aware of. If the transaction's not clearly identified on your financial statement that they from related parties, it's management responsibility to disclose to the auditor that we do have related parties, meaning related entities that either related through the board or through the management. The management also assert to the board or to the auditor that all subsequent events to the date of financial statements that were issued were disclosed to the auditor. What does it mean? So if we issue audit, if we perform an audit for the year ended September 30, 2023, but we done with the audit and issue audit report on August 12, 2024, it means that between September 30 and August 12, if there are any events, material and significant enough took place, management has to disclose to the auditor that something substantial took place, and the auditor will be disclosing that in subsequent events to the financial statements. If you would ask what, for example, those events would be, for example, maybe the organization obtained very significant line of credit, or maybe the organization opened a new location, or maybe the organization changed the name, and so forth. Or maybe the organization in the discussions with being acquired by another nonprofit, for example. So let's continue. Management also have to disclose to the auditor of any known and actually possible litigation and claims. So if any of these representations are not disclosed to the auditor, auditor is not responsible for financial statements to be materially misstated. Management becomes personally responsible for not disclosing sufficient and correct information to the auditors. Management also needs to disclose if there's any material concentrations. For example, organization supported by one or two very material donors, and maybe these donors not planning to continue to support nonprofit, or any other material concentrations. Also, management needs to provide information if the organization provides any guarantees, written or oral, that make organization is contingently liable. For example, if the organization signed or represented themselves as the guarantee for some loans or some performances that are not obviously presented on financial statement, but the result of those guarantees, organization may become liable in future. And moving forward, there is a section of what information management guarantee that was provided to the auditor. Management assert that organization gave access to all information which we are aware and relevant to preparation of financial statements. In my practice, we had instances when we were asked by the management, why do you need to have that information? But if your auditor indicating that this information is necessary, management have to provide that information to the auditor. Any additional information that the auditor requested needs to be provided for the purpose of the audit. Provide unrestricted access to persons within the organizations to whom the auditor determined is necessary to obtain audit evidence. Meaning that the management cannot say, this is XYZ, it's your point of contact and you cannot contact anybody else. If the auditor determines that they need to talk to program director, that they need to talk to the audit clerk, they should be able to do that. Management have to provide minutes of the board of directors and any other governing boards. Have to disclose all material transactions that are reflected on financial statement. Management also have to disclose results of your assessment of the risk of financial statement may be materially misstated due to the fraud. So if the management aware of any fraud, dishonest behavior, misplacement of assets, that information absolutely have to be disclosed to the auditors. And the management will have to confirm to the auditor that they have no knowledge of fraud or any suspected fraudulent behavior. Management, employees, or any other within the organization. Management also have to disclose that they have no knowledge of allegations of fraud from anyone inside the organization. The management not aware of any non-compliance or suspected non-compliance from law and regulation. So it means that the organization received any letter of non-compliance from any government agencies. That information needs to be disclosed to the auditor. That the management is not aware of any possible litigations, claims, and so forth. Management disclosed the names of all the related parties. And the organization confirms that it has satisfactory title to all assets. And there is no liens or encumbrances to such assets. For example, if the organizations own any real properties, it has not been encumbered for any additional debt that has not been disclosed, or there is no liens on those properties. And the management is aware and there is no non-compliance with law, regulations in contracts and grants agreements. In my practice, I met nonprofits that, because of lack of liquidity assets, they were spending money, restricted funds to pay payroll, which was not designated to payroll. That would be non-compliant with the grant agreement. This information needs to be disclosed to the auditor. An auditor needs to make a judgment how to present that information. And few more representation. nonprofit is saying that they exempt under 501c3 if it's a public charity. If not, their other C section needs to be presented here, and that they tax exempt. And the management have to name the people here who have suitable we call it skills, knowledge, and experience to oversee the auditor and confirm that they agree with all the adjustments, corrections, and the financial statements that presented on the report. Very critical. It's very common misconception among the management that the financial statements that auditor present are auditor financial statements. They're not auditor financial statements. They're the organization's financial statements, and they have to have personnel within the organization that they have suitable skill, knowledge, and experience to oversee the financial statements that were prepared by auditor and confirm that they agree and accept them as their own, and therefore auditor simply will issue an opinion that these financial statements are not materially misstated. But again, all these statements are the organization statement, nonprofit statements, and the state and management has to fully understand and own them as their own. And finally, representation letter needs to be signed at the end. Now, auditor cannot issue the audit report or review report without that representation letter signed and provided to the auditor, because this letter provides confirmations of responsibility of the management. This letter also verification that all information that was provided to auditor is accurate and provided in non-limited scope. It's also provide protection to the auditor and provides necessary documentation that's required by standard that auditor should have at the end of the audit. Thank you so much. I hope you guys understand a little bit better what representation means and how critical it is to the management to understand what assertions they make to the auditor during the audit and as a result of the audit. Thank you so much. Thank you for being here with me, and please watch my next snap where we're going to discuss about communication letter to the board at the end of the audit. Thank you and have a wonderful day.